Hello, hello, good morning. Welcome to another ES Futures trading video. Today is Friday, August 18. It is 8:56 a.m. Eastern Time in the US, and we are about kind of like a little bit more than one period before the opening. I thought it was worth to make another stream today. This is just a short one to highlight or to remember what is happening in this market. Um, Let me see if I can. I guess I can. I guess I can use. I can use the histograms here. Yeah, this is in 2 ticks. I have removed. I just have notice how this we are here 8:17, 8:16, and I just have the past week, and then I remove the last month, and this is what we have before the last month, because there is something here from June that I want to talk about. I'll come back to this in just a moment. This is the current contract. That is the contract that expires in September. You consider there's little trading here. Really low or low amount of contracts being traded, all the way up to June 12, which is this day here. This day here was the last day. I believe it was Friday. Let me check that. August, July, June. No, it was Monday. It was Monday. June 12 was Monday, and 11, which was Friday, was the day when this contract really started to pick up volume. When the rollover really started. How do I know that? I remember that, and also I have. I do have a record of it, which I'm going to show you. Okay, this is the week of June. This is the week of June when the June contract expired. It expired here, or expired here in this day. But 1 week the rollover started to pick up volume in Friday night. Now you can see. Now I have not records here, but the day previous, Thursday, you have 200,000 contract. Here you have like 50 or 100, and it's really small here on this side. And Friday really started to pick up. That's why I have this date. I remember this. And from here, the old contract, it just went from, what is the old one? Use M. It starts to diminish, right? You have 2 million, so 1 million, 1,700, and then it starts to go lower and lower. That happened this day. Here. Oh, come on. This is the weekly. My bad, sorry. No, what it is. Where are you? Here we are. This is the 9, and this is a Friday. We have a gap here. I don't consider this a gap here, because the new contract started to pick up volume here, right? This is just a not a glitch, but this when those update the contract, because this is the ES, and this is the end of one contract, and they just you know to match them, to use the same chart, a continuous chart, they change the values. That's why this gap was created. Because if you go back and check the current contract, it doesn't have a gap here. It doesn't have a gap. Here there is also something. There is something here that is. This is not real. I have no history gap. I was checking that day. I remember that day, and there was no gap there. But the thing is, the market now, the monthly has reflected change in the monthly time frame. All of the action that happened starting this contract that is about to expire in 1 month, well, a little bit less than a month, everything started here. And you can see that all of the loans here, all the long inventory has been pretty much removed. All the loans, and this looks like loan liquidation, because to me, because this is not really volume here. The volume is really low volume in the market. This is more just like a loan liquidation. All of this inventory has been removed. We know that loan liquidation for a fact strengthens the market. I'm not saying the market is going to rally, okay, but there is some signs that that the market is getting too short. Now all the time frames are in sync. The daily is trending down. The weekly also is one time frame lower. The monthly has also started. We still have quite like 2 more weeks to go to the end of the month. The next relevant reference in the bigger time frame is this 43.27, because it's the high of this range. This is the breakout, and this breakout here coincides with the day where this contract started to trade. It is reflected here as well, and it is reflected here as well. This is the second time in the last 2 years that I see this kind of sinks in the market, with the relevant date being yesterday, because we have this breakout, this potential of breakout in the monthly, and weekly, and daily. It doesn't happen that often. Okay, this is one cycle that I am witnessing. This is the second time I'm watching this in 2 years. Right, so I don't expect things like this to happen quite often. Also, when I think while reflecting that, it makes me remember of Jim Dalton when Jim says that the event that had happened, the pain trade, when bigger time frame money is cut short, or being in this case for them being short means that they are underinvested. It doesn't happen that often. Is what he said is, I still have, I still remember his words. Right, this is a one lifetime event. Probably you will see this happening once, maybe twice in your life. The pain trade, and those words put things in context. I don't expect this to happen quite often. Now, all of the supply or this break has been removed. Now, next week we have Nvidia, we have Jackson Hole. Pretty much the stocks earnings are over. I don't. There's no more potential catalytics for another more breaks or sharp rallies. I think we can focus on the market now. But there is a situation that is happening. We have this Evergrande um, Chinese company that is filing for bankruptcy. This is the second time in 5 years that is doing that. And the Chinese economy is weakening. That thing is also you can hear you can see more. We were talking the other day about how that topic is being talked in the media. I mean, more often. We have also the bond market. Notice how the 10 years very close to this. The bond market is at historical lows here. You know? And this could be dragging the market lower. Now, will the bond market be bought here? Who knows? The good thing is the dollar is recovering here. This is a short cover rally from the dollar after this sharp break here. The intraday has some rally. I mean, the overnight has a rally in the bond market. Now it's breaking again. He took all this inventory out. Now we're way up here. This could be another. This could be liquidation on this overnight inventory here. Dollar also opened higher. Potential for upside continuation. Gold has break. The gold is falling here. Now this is interesting here. Now they have this steady, nice trend. You know, this nice trending down in gold. Make a high here, it never make it again. It didn't get close to that. Another high here. The 2000 is being bought, is being sold. The 2000 is being sold here. Okay. Crude, oh, okay, look at that. Look at what's happening with crude. This could have a big break here. Look at this. 1, 2, 3, 4 lows here together. 5 lows together here. Okay, and having this the monthly, as we say, risk. If the monthly, in the bigger time frame, if this bar can get inside this range, the potential of the ultimate destination trade is the opposite side of the range. You know, but first it has to deal with this high. The weekly, we have talked about this level. Yeah? We have talked about this level here, how this was, it was a reference for all time frames. The market has reached this low here, it's 43.50. As of 9:10 a.m., the market is at 43.60. 43.60? Am I right? It has reached 43.50 in the overnight. Now and this is the ultimate destination of this trade. Right? Now, something can happen here, is that this market can look below and fail. The same rules that we use to trade when the market enters this range is the same rules that we are going to use here at the lower side. The market can look below and be bought, or can look below and have downside continue, have acceptance below this level here. But hold on your thoughts. Now, the next thing is the daily, right? This is the lower the range. This is the lower range. This is the breakout. This is the August high, August 16 high here. This one here. All of this inventory is out. All this long inventory is out. Now, you can see, we see the bigger picture. The inventory is very short. It's almost 100% short now. Below this level will be more accumulation, but notice something that is showing, that is starting to get some relevance, is this moving average here, the 100 moving average. Right? This 100 is $43.45. It's not that $43.44. $43.44. I have put it here. $43.44. It is reflected. The high, the breakout, when the market was going to the upside, is this August high. I should August 32. 2022 high. This was a breakout. All right, it's relevant to me because it was a breakout. I guess the most important thing is not this level, but I guess it's the 100. But you can use both, any of those. The structure below is weak. We have multiple gaps here. Multiple times the market was bought from the 50. We got 1, 2, 3, 4 times bought from the 50. Another time from the 50. Another time from the 50. Another time from the 50. Three times here. 4 wide low here, gap here, gap here, gap here. This, I guess, if there's going to be any kind of correction or significant correction, this market can go all the way down to the 44,000. I'm not saying that's going to happen, okay? But that's the potential. Not going to happen today, not tomorrow, but maybe, who knows? And that's it. And I'm not saying that because if we zoom in a little bit more here, what I can see is just notice these highs from yesterday. You got 1, 2, 3, 4 times the market was sold from this way. I focused too much in this high yesterday, and I forgot the bigger picture. The bigger picture was the market breaking, having this weekly, daily, and monthly breakout. This is history. This also doesn't matter anymore. I'm keeping this as a reference because the market can recheck this level. It has a spike. Yesterday we got a spike here. Another spike the day before, and another spike the day before. So 3 times back to back. One here, another one here, and another one. And this usually I would call this a distribution, but I decided to call it a spike yesterday just because we were coming from another one and another one, and it was pretty much the break of the monthly, of all time frames combined here. Now, what usually happens is traders are so used to buy the dips or to keep a position or hope that the market is going to come back, that they might keep adding. The market is breaking, keep adding. And when finally realize that this market is not going to come. Remember what everybody was thinking here. What is the thing? Everybody was thinking here, no, this market, they were going to have a recession, the economy is going to crash, there's nothing the Fed can do, blah, 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 blah. And you have this huge rally here. Very significant rally. What was the talk up here? Do you remember what was the talk? They says we are not going to have a hard landing. This is going to be a soft landing. There's not going to be landing at all, and everything changed. The conversation with the state just changed. We have to be aware of what's going on out there as well. When everybody agrees on something, when everybody agrees on something, when everybody has forgot what they were talking 1 month ago, watch out. That's when you forgot and you finally join the herd. That's a sign that something can happen there. That's when the market is out there to get you. I believe, and that kind of thinking, when finally the longs start to realize, no, this market's never going to stop breaking. You can see this going lower and 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 lower. This finally close. They finally close the positions. And closing those positions, when you have a long, how do you close a long? You sell, right? You sell. And when traders give finally throw the towel, is when you have these huge movements to the downside. And I have seen this before. What usually happens, you have a big spike, big spike. Inventory starts to getting too short, but it still keeps breaking. And a spike is when too much spikes start to appear, is usually a sign that the end is closer. Now, we have a spike up here. What I don't like from this market is we got a big gap here in the upper side. The high was made in the overnight, but that's too far back now to be of relevance. But notice this, right? Notice this day, the 16th, which was Wednesday. Notice how close it is to the previous day POC. It was sold from POC. Very technical selling. It was a really nice selling. It was happening from the highs. A really nice selling. The market has a huge range from the highs, and the VIX didn't move at all. That was a really nice selling there. Notice how many highs we have in this day. 1, 2, 3. 3 times was sold from this high. POC as well. So this is pull and weak at the same time. Now, the rally high was exactly the overnight POC. It may not be too much importance, but the fact that it was to the tick, that's what I decided to highlight here. Also, yesterday, sold from the highs from overnight high, and the overnight high here. And again, look at these highs here. 1, 2, 3, 4, 5 highs here. 1, 2, 3, 4 highs. Call it 4. You don't want to call it 5. You don't want to take this one. But I think there's a lot of stops here. It doesn't mean that the market is going to rally today and take these stops out, but the risk of being short is increasing here in this market. Now, the thing is, now we have a big gap here. What the market was doing the previous day was just liquidation. We have this inside bar at the closing, and this is the resolution of this inside bar to the downside. As a big gap. This is a 3-week range low from It is not too much of relevance. Um, which one it is? Let me see if I can have that one out. Okay, I think this is what I'm talking. This is 4351. Is this one here? You got 1, 2, 3 weeks, and this is this 3 week low, right there. Okay, and this is this mark here. This August 22 high is this one here. I don't know why it's 46 here, because I have it here, 27, 27. I think this is the contract from 20, but it's too far already. I guess this is, I don't know why I have it here, really. This may be the number that I have, because in my charts I have references from way back in time. Right? This 525 is not this year. This probably 1 year ago, and same goes for all these ones here. Right? This is November, for example. Right? All the way down to the market low. I don't know what I guess it was October 13th last year. Well, we have no excess low here. What I'm trying to say is this market is getting too short here. It's already too short, but we have a gap. And the thing here is, when the market has this kind of gaps here, this could be traders throwing the towel here, but still there could be some. We are at this level. We are at this level here, at this low here. There could be some acceleration here, or the market can be bought here, can be bought at this low here. It is very. I think today's what we have to pay special attention to what happened to this when the market reaches this level here. The market is not that far from this level. It's very close. The 46 is very close, because this is when things can change. Traders keep buying the dips. Every time they're buying the dips, they're being crushed, and the market just roll over them. We have a distribution here that I call this lower distribution. Here, the inside bar down here, then the overnight inventory is very short. The market is very short now. My focus, my short-term focus is the gap. I'm looking at what market can do with the gap and to the overnight short inventory here. If there's nothing the market do relative to the short inventory, this low, what is this low? What is the 2046? This low here. This low becomes relevant here. What the market can do around this level here. Being short has become risky, but focusing on what the market is doing. Traders are getting used to sell the market now. They're selling the market. But when everybody starts to realize, because traders keep buying the dips, you can see the traders were trying to catch a knife day after day after day. Every time they were getting cut. And when they finally understand that this market is going to the downside, that's when the supply for a short cover rally can finally be there. When just think of this. When do you think it's a good idea to be short in this chart? Down here or up here? Or up here? Or up here? Right? Oh, okay. I understand now. I understand. This is going lower. The trades to the downside. But we are down here. Not even down here. We are down here now. All right? That could be the laggard part of the trade in the bigger time frame. There are still so many things going on that can happen. What I try to do is I try to remain as neutral as possible. Use Michael generated information to get rid of bias, and I don't have a plan. Right? I am not ready to buy, not ready to sell. My plan is to follow what the market do. Keep things in context and make decisions based on market generated information and using odds. Having relevant or important levels can be of good use as well. I hope this helps. If you have any questions, please just let me know. Otherwise, this is it. Now, I wish you guys a good trading day. Stay safe. See you another day. Bye bye.